Hello guys, glad to have you on board again. Today, a final show today before heading into the weekend. And we have some interesting moves into the cryptocurrency sector as we speak. Still requires to go further away from the current prices. So we need a little bit more volatility, but we could actually have something to talk about before heading into the weekend. So not to say you should get yourself in front of your computer for the next 48 hours, but the thing is that you need to have a look. At least set some alerts and just be ready to eventually look for that market. Even though, and I stand on this, I've been clear, I think there is nothing to do despite tiny potential speculative trades on Ethereum, not on Bitcoins. And for those who want to play that game, there might be some breakout trades to trigger in the next following eventually hours. I think we have a breakout in here. If we break up that bearish trend channel, we're probably going to have a bullish momentum heading us toward the 300 area and probably slightly higher, as we'll also break the long-term trend channel, which is the daily trend channel, in which we're probably going to have to break through, and it should lead us to rapidly work out the 300 area. But I think this is the area we should very well lead to, which is 500, but we could very well range for another few couple weeks or something like that. So really, don't overthink about the current timing. It really is that kind of candle happened before, and it really was nothing we should care about. So really, don't overthink things. But if this things has to be keep on going forward, as to me the ranging structure seems to be maturing. It's an ABC. So I see two bearish waves. It's interesting. I'm forecasting this to be mature enough to terminate that consolidation and eventually head for some new bullishness. Question is if this is really about to be the case. So I strongly suggest, if you want to trade those markets, just do it the way I've done, meaning you can make a bullish trade breakout in here, put a stop loss in here, and basically you trade a 1-to-1 ratio. So you take this, you forecast this to be a range breakout, and you target 1-to-1. So you go there and you target this. You put a target in here, you take 50% off the trade, you pay for the stop loss, and you let half that trade on going for further away target. But basically you just trade the acceleration, take the gains, partial gains to pay for stop loss, and then you just let go with that position. All that remains is free Ethereums. Okay, you just take it that way. If you, for example, if you take 10 Ethereums, you take 5 off in here, and you've got 5 free Ethereums. And if your Ethereums just drops down afterwards and take down your stop loss, basically you risked something, but you're not taking a loss, and that's no problem. But of course, if they don't stop in here and just kept on following through, then you're good, and your 5 Ethereum will just gather some more value in the process. Okay, so this is the only way I see a potential trading scenario, at least interesting trading scenario you can eventually try to profit from. Don't overexpose yourself. Remember that when you do trade, using leverage is your worst enemy. So remind that when you do speculation, if you are piling up position entry, you're basically adding leverage, adding the exposition, and that's the error you absolutely don't want to make. So if you already took some speculative trades, maybe you should just stay down, cool down, wait for this to happen, and maybe not trying to add value to those trades until we actually validated those breakouts. So I'd say, in order for those who are already maximum speculative leverage, you just wait for the 250 to validate the breakout. So for the price to go there, range a bit, and go further away to start showing some trending, showing some bullish price structure, higher lows and higher high. This is what we're looking for to give us some sense that the market is recovering finally. But be aware that volatility is a dangerous place in here. But once again, I think volatility will be the problem in Bitcoins. I think trend is more probable in Ethereum regarding the price structures that we've already talked about. It's been oversold in Ethereum, so we should return to the mean, where I think Bitcoin will just oscillate up and down around the mean value for a bit before turning those moving averages to the upside slowly but steady, and then reinstalling bite by bite the perception of a bullish trend. So set aside needs to have confirmation of this. So far we haven't, so don't overthink. But if we do have some interesting moves during the weekend, and I kind of feel that we might have a timing to do this, then you know what to do. Sorry about that. So moving on, the stock market keeps on following. We're breaking through lows. We're breaking a bullish signal, which is great. Finally, we're fucking up the bulls after being fucking up the bears for so long. We have a target in here, 6,500 for the Nasdaq. We're going to see if this target highlights something in the daily chart. I'd say yes. We have a support in here, 6,400, and yes, I'd say we've got this level to go break through. So we're going to make the technical analysis right away. So just put that level in here. It's a breakout level. God damn it. Come here. Okay, so we've got key level. So it's a breakout level. I think we're wave one, which means we're probably generally wave ones just goes to take some stop loss below support. Just take that as an example. We've had support in here. The market just went through, took the stop losses, and then retraces. So I think the next support area is in here, not in here. So I think the market may try to just go there. We're going to note this one as well, just in case. Sorry, not this. Just in case, we're going to write this one down as well. I think the market will try to break one of those, just goes slightly below, triggers the stop losses, and then brutally reverse. So you get those targets. This is where I think the market wants to go. So we can use Fibonacci extensions, even though in that context that's not the smartest choice to do. But you can forecast the price to head toward extensions. The way you do see this, we clearly have an interest on that first support. So 6,500, or this one, which seems more reliable to me, $6,320. So we could just go there, fuck the stop losses, and make no candle closes below there. So I would suggest us to go there. So this is pretty fucking down. It means out of yesterday's candle close, adding another 8% downward move on the Nasdaq. Let me be clear, Apple is probably going to gap down today again. Still the same support area. At some point this support will have to fail, and if it does, worst is to come. So it probably will happen. I'm trading according to this. The thing is that right now, the market wants to hold the gains as long as possible, trying to get ourselves into the Apple's earnings. But I think it is not about earnings anymore. It's just about the price structure. The price structure shows Apple is in heavy danger of just collapsing. And earnings or no earnings, the price structure shows some very strong weaknesses. So we'll see about that. It's still speculative, so don't put too much leverage if you're trading Apple. It could very well gap you up 5 to 10% and fuck you up one more time. So facing that risk, you cannot take over risk yourself, so you just don't play that dangerous game. Okay, so I would say in here probably we're going to find a support, so get interested and remind you about that area. We're probably going to have to see this, but I can see that the market is heading bearish and having some really strong bearish structure. Look at the 2-hour chart prices. When you see this, oh fuck, what's about to come is really a parabolic move. So I expect kind of a collapse today for the Nasdaq. And if it's not today, it's going to be probably early Monday, in which we can expect Apple to publish. Apple is going to publish when is it? No, Apple is going to publish next Thursday. So anyway, we've got multiple options. I think for us, the worst is to come. I just don't know how and when, but you can clearly see the parabolic moves to the downside. So the market is trying to recover, always fail to break a resistance. We're going lower each and every time. The slope is accelerating. So you can expect that sometimes some nasty breakdowns. And I've been clear on that since the first day. The way I do trade the NASDAQ is as a crashing fucking market. So as a crashing market, I'm looking for a psychological effect. I want the people to panic, not to just fear. This is rising fears, okay? I want to see panicking. So what I want to see is that V-shaped bottom. Going there, straight line, just like we had back then, and V structure, okay? Not, okay, oh, problems, oh, maybe we should cool down. No, I want to see fucking problems and flushing those problems out instantly. Like, going the fucking hell out, heavy tension on the liquidity, and then we'll recover some liquidity, V-shaped structure, and I expect this to be happening near those prices. All right, so facing this, I've always been clear. I remained bearish on the NASDAQ, even though lots of traders are already trying to buy. I think the worst is still to come. I've been standing on this. I've been clear on that. I stay there, and I change nothing. I think the NASDAQ has the worst to come. And the fact that we're breaking down double bullish is really, it's not double bullish actually. It's just a bullish cycle versus bearish momentum and bearish prices. And for now, the momentum is winning. Clearly it is. Lots of signals suggesting that the worst is still to come. So I said until we remain below those latest bearish signal, to me, no. So if you're bearish, just lower the stop loss and let go, because the market could just fucking collapse and make people panic. And this is what I'd like to see. Panicking people in that market, and I don't know. We'll see. Okay, we'll see. But lots of earnings are disappointing. Some are still making it to the consensus or even beating it, but previously, remember what was the earnings season like? It was like, oh, great news. 97% of assets were beating the consensus. I mean, fuck it. That's just nonsense. It's just the analysts were always downwarding their expectations so the market could beat it. So, yes, we know about that cheating game forever. It's always been the case. But it's gone so stupid recently that it was just too big as a manipulation. So now we're facing the problems where analysts are downwarding the expectations, but the market isn't even beating them. Worse than that, it's unwinding the pressure and rising the bearish pressure. So it's not a good sign. Not to say it's a bad sign, but the thing is that we still have some big unicorns who make good numbers, like Microsoft and things like that. And the market just wants to focus on what's good and just let go with what's worse. The problem is we'll get more and more worse, which is worrying, but the market isn't worrying. So at some point, I want to see it panicking, just realizing what is really in front of us. And then when people will panic and say, oh, fuck it, we might head toward recession, this is where you want to rebuy your sell entries and just let the market rebound. Make the dead cat bounce. When people will panic and start selling is the time you want to buy. Not to buy, because you don't want to be crazy enough to take buying entries. I won't do that. But I obviously take down my sales and take some gains. Now moving on. Yieldings. Big other problems. Euro area yielding 0.35. What the fuck? 10-year bonds, so 10-year German yields, pricing 0.35. We might be heading recession in Germany, so there might be a problem. Recession, when you do trade bond market of a nearly close to recession economy, you're generally trading 3, 4, 5% bonds. And we're trading 0.35, so fuck it. What's the problem? We clearly know what the problem is. It's the ECB, who's being dovish again yesterday, which should nearly haven't been close to this. Well, Draghi should have been hawkish, and it's been pretty fucking dovish. and basically said, okay, you know what, if problems are ahead, we're gonna print some more bills forever, no problems. We've got the ability to do it. Problem is, it's the worst timing to go to remain accommodative. We're end of cycling. When we do this, you need to be hawkish, because that's what you're supposed to do if you want to maintain stability. You need to cut some slack in order to have some back end that you can work on if things turn to be unpretty. The thing is that right now things could just do that, but the ECB has nothing to rise. What are they going to do? Double or triple the amount of QE? We don't have enough money, we don't have enough liquidity on the bond market to do it. So the ECB is down the wall. It's been doing too much shit for too long, and we're going to have to pay for that shit. So at some point, either we're going to go negative interest rate, but that's not possible. You don't do negative interest rate in an economy that is not creating value. It doesn't work. Anyway, it's blocked everywhere for the euro area, and I don't really get what's happening right now with the bond market. People shouldn't seek for cheap bonds or for very expensive bonds. Obviously, we're going to have lower rates. We're going to have higher interest rates. So a lot cheaper bonds. So why the fuck would you buy them right now? So I just don't get it. The ECB is the only one buying the bonds currently, and no one stands in front of this. It means no one wants to sell the bonds as the ECB keep on buying them, and there are very few of those. So we've got illiquid markets. Very, very dangerous positioning, as the ECB is the only one who's providing debt to the German economy, and that's a problem. Because when the ECB will stop doing it, whoever the fuck is going to do it, and at what price, is the rising question. So we'll see about that. ECB is going to terminate at the end of that year, and in between, as you can see, that market isn't trading rational. All the signals are basically just ignored, so that market is heading downward forever. So we'll see, but I see that as a totally abnormal pricing, but that's how it is. I mean, we're breaking down trend lines. Really? Is it the case? We're going to be there in less than 2 years, so why should we break down trend lines? I don't really get the point. But that's how it is. The market is just fucking up speculators currently. It's like whenever you try to think, the market will just do the opposite, because you're the only one taking a stand, and the market just want to fuck you up. So just play that game. I know we're going to pay for that shit sooner or later. So no matter what, and I've been clear on this, I will remain bullish on German yields forever until I get the price I want to. And even if that means getting a crash in the bond market, you can be damn sure I'll be selling the bonds each and every day. I want to have them. I'm not saying I'm doing this fully leveraged. I manage the risk, but I want to be bearish on bonds every time, every day. I want to have exposition to that market, to the bear side, because at some point it's going to go unpretty. And the problem is, I want to be there. At some day, something will change, the psychology will change, and speculators will try to fuck up the ECB. And whenever this will comes, we'll have lots of problems, because at some point, we'll still have lots of money to make in here. It's money to make, and I think the ECB is doing anything it can to prevent the speculators from trading against it. But it's not going to last forever. It's a matter of confidence between the private sector and the ECB. They say, okay, you don't speculate against us, or you're going to have problems. Okay, I think that's what's at stake in here. The ECB basically says, okay, we've got an illiquid market. Yes, there are some speculative opportunities in here, but if you do trade against us, you'll face problems in the future. Basically, I think that's what prevents every speculator from getting into that market. And the problem is it's creating distortions, and we're going to have to pay for those. So I'm waiting patiently, but I don't think that market is going to go further away. I think the 0.30 in here is really nonsense. We shouldn't get there. I don't really get that thing. So if it has to be triggering a stop loss, I will, but I don't think it is. This expiration for those contracts is December. So I think lots of things should happen still December, but I don't see us breaking down support is an option. Clearly it isn't. We've been working that support for long enough. We should work out those rates rising higher than 0.75, so we should head toward higher prices, probably 1% in the next following weeks. So patiently waiting for this to trigger, as for now, I'll just have to be suffering the pain trade. Okay, that's how it is. I mean, it's an expiration trade, and I do hope they're not going to fuck me up once again with that expiration and just lay down the thing until we manage to, we could just do this, just like we've done. Go down, die in here, and then whenever the contract's expiration goes, then finally the yields are rising. I mean, that's what we've done recently. So problems are ahead. We shouldn't have that, meaning the Italy yielding is rising again, and the Euro and the German yielding is falling, and it's abnormal. We shouldn't have that, and as long as it goes really, really, it's a problem. Okay, so we'll see about that, but it's a problem. Okay. Other markets, gold. Gold, I think, is about to break resistance. 3 days we're working this out. Might have another pullback in the next days. I don't really care. It would be short-term pullbacks. You can see the market is trying to sharply rising, preparing itself for the breakup. So closely watching for this. Euro dollar, once again, I don't really get the policy that's been choosing Mario Draghi. It's the opposite thing of what it should have done. Just as a reminder, what the ECB does is the worst ever job I've ever seen from a central banker. So we're going to zoom out just to see what it is. The market was already bearish, so the QE in here, the QE launching was the worst timing ever. It wasn't necessary. It just created volatility. It just brought volatility to the euro indices. So instead of bringing stability, we've been bringing volatility, which is the worst case scenario for a banker. So your job is to bring stability. You've been bringing volatility. Clap, clap, clap. So ECB, pretty fucking awful job that's been done in here. Obviously, we're going to have to pay for this because QE is introducing distortions. Second thing, okay, we're going to talk about this straightforward. ECB's euro-dollar rate to calculate inflation and everything that like that. So inflation, growth projection, everything like that has been set as 1.18 for euro-dollar. So if we were about to break 1.13, the next target is below 1.10, and it means we are pretty far from the expected target, which means ECB is out of inflation calculation, out of growth calculation. We'll have to recalculate, so recalibrate. So what the fuck? Are going to go QE forever? That's what Mario Draghi said yesterday. Basically, if problems are ahead, then we're going to pay again. We're going to make the bill. We're going to make more bills to create more problems for the future. And no problem with that. We're going to do it forever. I mean, whoever the fuck can believe this is ever possible? No, it's not going to be the case. We're going to have to pay for that shit. And as a European myself, I'm really concerned about what Mario Draghi is doing right now. I think that's totally abnormal. It's raising a lot of concerns. And I think at some point the Germans should just worry about the fact that they may face a bond problem, a bond crashing market because of the ECB's investment in there. And that's a huge problem. I mean, if the ECB fails, and to me it really failed. So the problem is central bankers have the powers to create money, but the problem is if you create money without confidence in that money, what you create is huge inflation. So far it's okay. Apparently the market has confidence in the euro printing some bills, but the problem is if that changes, we're going to have surging inflation. So impossibility to create new bills because you're basically printing new bills that has no more value, so you're just creating nothing. You're just devaluating the money, and that's the problem. If we go there, that's a dangerous path for the euro area, and it's far from bringing stability into the market. So I think at some point Mario Draghi should just really react, or they should just send someone else from the ECB to just make things clear that the QE is going to end and that we're heading toward rising interest rates, as we should do, as we're pretty late into the normalization cycle. We're almost 2 years late right now. So that's abnormal. And as you can see, the dollar is suffering from this. Not suffering, it's overpricing from this because of the ECB's pricings, and that's abnormal. Okay, at some point, ECB should just do its job, because otherwise we're going to have to pay for this for a long time. Because when you do monetary policies like that, it takes years to unwind them. So you cannot unwind policy, you cannot tighten policy on recession. So if we're heading toward recession, how are we going to do with the ECB? We're accommodative right now. We cannot necessarily do more accommodation. So how can we tighten the policy during recession is a problem. It's never been done, but we might have to do it. And the problem is we're not ready for it, and who knows how the market will react. So we'll see about that, but I think Euro might have some problems if we don't readjust things in the next following days and weeks, because ECB is doing a pretty dangerous job, and especially Mario Draghi. I think some people are concerning about that. We've seen lots of major guys in the ECB being concerned about the fact that we should be a little bit more hawkish. But just Draghi, if he feels like it is doing a good job, and he wants to make sure that whenever he leaves the sit, he makes sure he hasn't faced any problems. But that's the worst case scenario. He's going to leave at some point, and what's going to happen with the next one? He's going to have to face all the shitty problems he left behind. So think about it in a broad perspective. Euro-dollar probably going to be there in the next few years, so why the fuck are we trying to break support? It's just, the market is just, as usual, doing the opposite of what it should do. We're going to go higher, so let's fuck up the speculators first, and then we'll eventually do it. So it's a problem. Same problem all over again. The market just goes irrational as long as it can. It's just trying to do the opposite of what makes sense. It's not going to last. That period has been lasting for 6 to 12 months because we're end of cycle, so the market just tries to do something when it doesn't want to do, but it has to do it anyway. Gold will rise for a short period of time. Euro-dollar should rise as well because dollar should weaken. But the problem is, we're just seeing the opposite. It's like the market should do something, but it just does the opposite because fuck you first, and then we'll do it. So we'll see how it goes regarding dollar. I see very dangerous policies out there. Simply, to me, it's the euro area who's doing a pretty shitty business. So I'm not going to complain on the Fed. To me, Fed definitely is doing the best job ever for a central banker. They're doing their job. Trump is criticizing them, but really, Powell is definitely one of the best central bankers I've seen. He's standing in front of the market. He's doing it pretty well, and he's doing its job. Yellen's been doing a great job as well, but I think Powell is definitely a very good central banker, where Draghi clearly isn't. So we'll see about that. That's personal interest in here, so you shouldn't really take care of this. So Apple's going to get down today. We'll see how low this will be. We'll see how the market will react. Once again, anytime we go break down that support, it's game over, and big problems will be ahead. It can take some weeks again, so we can work this area for a bit before heading downward. There is no patience is required, but we clearly have a dangerous timing for Apple. General Electric is concerning as well. We shouldn't have been pullbacking that low. Yesterday shouldn't have been a bearish day for General Electric, but it's been. So we'll see. I hope this consolidation will be over in the next few days. I would have liked to see that gap remaining open. We've talked about that earlier, that if we did have a pullback to that price, should be a buy entry. Obviously, the thing is that closing at the lows is nothing close to buy entry to me, so I'd rather like to wait to have further informations in there. Yes, and it's even more lower today opening. So pre-open today even lower. So we're getting into the gap. It's the worst possible scenario for me, but that's how it is. Apparently it isn't doing great. We're having potentially bearish breakdown, so I want to see the market holding that support. So it's $11.5 for General Electric is a target today. The market has to pay for this. If the market doesn't, you can see bullish breakup, bearish breakdown, sees that normally we should have a range and we should stop near that target. But I would have liked the market not even to try this, because now it says that we're going to have to extend the range in that area and probably won't have the bullish breakup until it's going to take a while to bullish break up that market. So patience, more patience going to be required. We got the earnings in here, and I hope they will be bullish for us. Okay. So first time in a while that we're going to have some rising interest in here, and I think I want to see that on the pricings. And unfortunately for now it isn't, so we'll wait for this to happen. I hope the earnings will be positive in here and just trigger the next bullish wave after consolidating. But I would like to see some early positioning. Basically what I would like to see in here is a market creating a dip like that, and using the earnings to trigger that wave. You need to trigger that wave with another gap, and then I would like to see the market moving up and breaking that resistance will be the good sign that the market is recovering. Okay, so we'll just follow through this. We're running season, so obviously we're long-term buy and holders in here, and I'm basically waiting to see the price confirming that buying interest. But so far remain speculative. All right, that's it for today. I'm going to take questions if you left some. Okay, just put a short position. Market shows to be crashing. Yes, I think, but crashing is a big word. Crashing just means people will panic and break down supports. Any idea on when the trading view analytics will be updated? What do you call it? What do you say? I don't know what this is, trading view analytics. FTSE and AMD. Yeah, AMD is fucking collapsing, but we're gonna talk about that. So AMD, big gap down, big problem, market's crashing. So yes, I think we've returned to volatility area, suggesting that this market should stop or go in further, a little bit below, because I think the market now should be panicking a little bit more. So I wouldn't buy anything, but obviously those who are selling should be putting some stop losses above the previous day's high. So you just let go with that market, should make lower lows each and every day, and until it makes higher high, you just try to get out, okay? So just let go with the underlying bearish momentum. It will be stupid to take the profit just right now, but you should be ready to take them any day. Okay, it's going to come soon. It's going to be brutal. It's going to be V-shape. So either you forecast to take your profits on that support, or you put the stop losses and you lower it day by day. As long as we remain bearish, you let it go. But beware that someday it's going to be brutally reversing, because we're going to find the stop losses and there will be no sellers anymore. The FTSE, yes, I'm still bearish on this one, but no more than that. Basically, I've been taking partial profits on that area. That was the expected plan, and I think that we're going to go lower. And it says that we're probably going to have to break down that low. That was part of the plan. So I still have 50% of that trade. I'll take the first profits below that low and on that area. So I'm still bearish in here. Still have bearish leverage, and just let it go. Seriously, I don't expect fucking irrational crypto to cool off so easily. Been mad on going up, so it should go down like that too. Oh, no, that's not the way you do this. You don't think at that point, you just speculate, and that's how it is. Speculation comes with, you take down the true, false, good, bad, right, wrong, all those shits. It is nothing we do when we speculate. I don't care about right and wrong. It's just risk manage and let the future do what it has to do. The time will play its game. Can be bullish, can be bearish. I don't give a fucking shit. My life doesn't depend on what the Bitcoin will do. Really isn't, and it shouldn't be the case for you. If you care that much, it means that you're overexposed to that market. Okay, that being said, so we should expect some breakdowns sooner or later in the FTSE. Obviously coming down as well with some breakdowns on the Nasdaq, SPX, so everything suggests we're going to keep on breaking lower. German indices show some very strong weaknesses. We're trading that area, which is a breakout area, so I don't see any reason for us to stop there. Probably going to have to go facing the 10,800. This is where we should find some support. So I see no reason for the German economy to survive that. Of course, so I see more bearishness to happen today, and okay, so we've got yeah, it's Alphabet earnings yesterday. Was another rough ride, disappointing third quarter in Amazon and Alphabet. No, it was on Thursday. Okay, blah 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 blah. Futures and in third quarter GDP is suggesting that the Fed will write pipe of change in the coming month. Okay, maybe. Oh, god damn it. The market is lost and everybody is trying to figure out what the hell's happening. I mean, it's been acting irrationally to the upside, and now that we're going irrationally to the downside, people just want to make it normal. People just want to explain that and make it rational. I mean, fuck it. It's been irrational. Just let it be that way. It's normal to be irrational bearish because we've been so long irrationally bullish that we have to pay for that shit. It shows that we're wave 1 trading and nothing close to wave 2 to wave 4. So everybody thinks we're going to recover from this. We will, probably, but we're never going to make new highs afterwards. I don't think we will. What we have in here shows that we have lots of bearish demand, and we're breaking them. We're just wrecking the bullish trend at the current time. It's terminated. It's over. It's no longer bullish. You have to face that. We were ready for this. The problem is, and now we're going to terminate with that. Remember about that old chart we've been setting back then. Because once again, I say a lot of things, but I stand for those things. Okay, this is the analysis we've been doing previously. Okay, remember it's ETF volume versus SPX volume. The thing is that ETF volume is still going sharply lower. Okay, it's ETF supply versus demand. I'm gonna go weekly. No, daily is enough. What the fuck? What I said yesterday was pretty. What I saw yesterday was different than that. Something has changed. What the fuck? I saw the market breaking down at support yesterday. So, okay, maybe some things have been changing. But the thing is that obviously we should see that ETF volume just pouring out the market. And the problem is when it does, we're probably going to have to break those lows. So SPX, I'm not that bearish on this one. The problem is I think the NASDAQ has some lower potential because if the big names like Apple just falls once again, another FANG will just drop. And if you look at the FANG index, well, just look at that. Just look at that. We're just getting it started. Facing the FANG index is just holding because Apple is holding. In the FANGs, we've got Facebook pretty fucking down, Netflix pretty fucking down, Amazon about to be down as well, Google about to be down or already down, Apple just holding, Tesla just holding. So the thing is that as long as we fuck up Apple, this chart is going to look pretty fucking ugly, okay? And the thing is that what we have in here suggests that we're going to go fucking up the ETF traders. We're going to make new lows in here, just go down there, and we'll see how low we can go. But normally in here, we could just freaking make everybody panic, meaning all the ETF volume is going out, meaning this will be the sign of panic in the market. This is what I want to see. To me, this represents the stupid guys' volume. They are not going out, so we're not going lower enough. We're going to go lower just because of this. Just because we need to make those guys scared and panicking. Scared is already the case. This is why we go back to support. We are unwinding, but I want to see them panicking. I want to see a huge down pick in the ETF volume, meaning that the guys who are holding ETF are just now selling them at the bottom. When I see this, I know the trend. I know the first bearish leg is probably going to be about to terminate. I think right now is not possible. We should fuck up that trend just to make sure that they got the lesson. Okay. So I remain bearish no matter what. We'll see what happens what happens this afternoon. It's going to be an interesting trade, an interesting trading session, especially regarding Apple. They're going to open once again on that support, and we'll see how it goes. Okay, so once again, Apple hasn't yet broken down support. Okay, we're trading. Oh, we're already trading 290. There's a problem in here. What the fuck is happening? Something might be off topic in here. Something's wrong. They tell me it's trading early hours at 2:15, and in here it says 290. Is delayed or what the fuck? Okay, well, though I don't know, but normally Apple should open lower after dropping sharply and showing double bearish signal before the candle closed. So it's the worst case scenario in here. Open again in here with a lower high this time. So the worst is to come. Last time we had higher high, or at least equal highs and equals lows. Now we've got lower highs and lower lows, which means bearish momentum. And I want to see that thing triggering once and fucking for all. We've been playing long enough in that range. I mean, look at how long it took us. Okay, previous range, couple days, and it was good. Now it took us 2 weeks to work that fucking range area. So yes, obviously what's about to come next is going to be ugly. Because of this, because we've been ranging too long, then we're going to release that energy. It's going to be the worst ever. But the market doesn't want to anticipate. That's the thing, you know. It's too bad if we just release Apple. Oh gosh, people will just panic. But this is what I want, people to panic. When we'll get that, we can eventually even imagine, I mean, look at that. This is where we've got Apple's earnings. Okay, now switch to 2-hour chart time frame. Apple's earnings. What if we just do this? Oh, panic! Or not necessarily in a single day, straight line, but what if we do just that? Okay? To me, that's a possibility. Apple just freaking sharply dropping, market panics, Apple is sold, all the ETF volume is getting out the market because the big name is falling, so there's no longer big names, there's no longer growth, so we're ruined. We're going to have to sell those ETFs at very, very cheap prices, which will be, once again, the worst case scenario. But what if we do just this, okay, and earnings are not that bad, we're gapping up, and we're making the dead cat bounce. I think this is very much of a probability. Okay, we could very well do this, dead cat bounce, and fucking shorting again. So, wait for this, but I would like to see the market panicking before the earnings. That will be better, because earnings to me will be a big danger as a seller. Because if they tend to be great, as the market has some strong, crazy, bubblish demand, we could very well have another 10% gap, and I don't want to be bearish in a market that's going to gap up 10%. So, I would like to see the market panicking before, and I'm hoping that this will be the case sooner or later, but just the market try to just trying to gain some time to avoid taking that decision before the earnings. But I'd like to see this happening. Just collapsing because of too much risk, too much pressure in the market, too much bearishness in the equities. So I'd like to see, yes, really Apple triggering and making another 5% day on NASDAQ just because of it. Meaning Apple making minus 10 to 12%, just a big thing to make big headlines, to make people panic, okay? Let's imagine that. Market opens, sharply break down for support, bearish trend, bearish gap, bearish flow, bearish trends. Everybody panics. We make a minus 10% on Apple. Makes all the headlines in Wall Street. Everybody's going crazy. People are asking their broker to get the fuck out of here. And obviously tomorrow is going to be Monday is going to be a pretty bearish day, panicking day, and then terminate. Okay, we made a pretty awful Friday, Black Friday. We'll make a bloody Monday, and then over. Apple just lost 25% in 2 days. And terminate it, okay? We do this 2 days. 1 day, Monday, we gap down, we flush everybody out in a single straight day. We take the gains as sellers out and just let go. I just say that because it really sounds like a plan to me. Now we'll see how it goes. I really don't know. We could just wait for the monthly close to occur. So we just do nothing. And on Monday, we start nasty playing. So we could just have it. We do nothing. We save the game until we get to Thursday. And Thursday, we just collapse in a single day, right before the expected release. We see about that. I just don't know. All I know is that all those who make a plan right now are having problems. So don't overthink things, manage the risk, and just let go and wait for the timing the things will collapse. Until you don't see people panicking, you want to remain bearish on Wall Street. Because I think panic is a necessary emotion that we have to feel. Not in the entire market cap, just on specific areas, okay? Because we've been pretty oversold on some sectors. I mean, look at the Russell. Look at this. Look at fucking this. The market is over. We're already minus 15% in here on the small cap. So small cap indexes are suffering more than ever. They might have some tiny, a little bit more downside because in here we're clearly going to have some support in that area. And I think the market has another final downside. But the thing is that NASDAQ, on the opposite side, this one should be the weakest, but it remains the strongest for one reason: Apple. Really, I'm not fearing to say that. It's just because of Apple. Apple falls, NASDAQ just dies, and this is, I think, what needs to happen. So we'll see if today or tomorrow or Monday, if Apple starts to fail, or if it doesn't. We'll see about that. It's just a matter of timing. If it managed to hold until the release, the earnings release, and if for some reasons they're still good, we'll see how the market takes it. But it's not necessarily going to be bullish. You have to be aware of this. That's a possibility. So now finishing with the forex market. So it's doing pretty well on the AUDNZD. Fully leveraged on that market. I'm still 4 to 5. I'm waiting for this to play its game till we go 4 to 5, to go 5 on 5. But for now, leverage is back in that market. I'm ready to trade that. I'm pretty happy the way it behaves. Another scenario that has been triggered: reinforcements, fully leveraged 5 on 5 on the NZD yen. I think the breakdown is about to occur. The market is ready enough. We got lower lows, bearish momentum, ready to fuck up that support. It's going to be a fucking huge drop. So you can expect the AUDNZD to trigger as well. So I see some bullishness on AUDNZD because so weaknesses on the NZD, so much weaknesses, and I see yen is going to be it could be strong in the next following days. So everything suggests panic is down the corner, but nobody wants to see that. Gold is below resistance, waiting for breakup. Yen is on the support. Yen is on the resistance, waiting for a breakup as well. Lots of currencies are in the support. I mean, Euro yen is fucking breaking support as well. It's going vertical as expected, and it's not going to stop. Okay, we're probably going to fuck up supports right away. So Euro yen is strongly bearish. USD yen probably is going to be as well. Everybody wants that to be strong and whatever shit this is, but it's not going to last too long. I think the dollar yen is going to break down support as well, and whenever it will basically show the red flag for the U.S. economy because everybody thinks this is going to be bullish forever. If it goes bearish, some people might have some problem. USD yen failing to break resistances, in a bearish trending market. Okay, just reminding this to you. When you see that kind of market, oh gosh, you don't want to be buying that. Obviously, this is where you want to buy the USD yen, but clearly not right now. So waiting for this to terminate, to play its game, but I think everybody wants to see the dollar bullish because just Mario Draghi has been doing some shit. But I think Mario Draghi is not the ECB himself. There are lots of other people not really liking that kind of leading in the central bank. And at some point, we're going to have some hawkish guys talking, and it's going to replace the market in some more regular areas. But I think anyway, dollar is just mostly pricing because of the euro, and this is it. But I think versus yen, we're going to have some problems. So I'm not very interested in euro-dollar pairs. I'm more likely interested in USD yen, which means I'm basically bearish euro yen and bearish USD yen, so I don't really give a shit who's going to go lower first. And I think both are going to go down, and I'm not invested that much into euro dollar. I have bullish euro-dollar positions, but they're speculative, and they're not doing well right now. Let's set things straight, but we'll see how it goes. We could very well have another unwinding kind of move, but for now, the market just wants to go bearish and doesn't find the support. Yeah, I mean, look at that. The momentum's ready to reverse. We're terminating that bearish oscillation. We've been 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. 9 month bearish, And generally cycles are 7 to 10 days, 7 to 12. Okay, so we're counter trendy momentum, which means in here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So as you can see, 13, because we've been trending, so it's generally on that 7 to 12, you generally make the maximum on the trend and the minimum against the trend. So we should be doing 7 days consolidation, 7-month consolidation. We're already 9 months, or heading 9 months into consolidation. So at some point, Euro should find some support in here, terminate that cycle, and have some bullish momentum. Bullish cycle, bullish momentum, and break up some resistances. It's just a matter of time. In terms of month, but it requires patience. We could very well go a tiny bit lower. It's no big deal. But the problem is the trend, the long-term trends remains bullish, which suggests we're having problems in here. Moreover, the momentum we're doing is strongly bearish, even more bearish than the previous drop in here, which shows hidden bullish divergences at play in here. We're just waiting for this momentum to terminate its game, and then we're going to have trending momentum to the upside. All right, so just once again, it's not to say I'm not wrong, I'm going to be right forever. No, I could be wrong in timing in here, no problem with that. And then I'm going to take a speculative stop loss and get again in that market, go again in that market at lower and better prices, just to have a bigger picture of what's at play here. I think the market is just ready to trend up, and that's that trend I want to take, because we'll have price and momentum accordingly going higher. All right, so that's it. Bye guys, and trade safe. Have a good weekend. Watch out for cryptocurrencies, and if we do have Black Friday, really pay attention to Monday. It's probably going to be a bloody Monday as well.